Hi, I'm Kim Watson. In this video I'm going to show you the Heiken Ashi Bars, or introduce you to Heiken Ashi Bars. The reason I'm doing this, I actually used an example of Heiken Ashi on one of my morning outlooks. I think I did it on Friday morning actually, and I just wanted to give a bit more detail as I've received 2 emails asking what were those bars again. So here we go, this is what they are. So firstly, the principle behind Heiken Ashi Bars. Basically the principle is to identify the trend easily for using them. They reduce the market noise because the way they're put together, and hopefully the more important thing is they help you stay in a trade longer. They can help you identify entries. They're not so good on identifying exits, I would suggest. They can be a bit late on the exits but better on the entries. Sometimes they're perfect on the exits as well, but the principle is the trend. What we get with retail traders is that they hold on to their losers, their losing positions for a lot longer. They have a lot more patience there than when they're holding on to winners, and this might just get you to hold on to winners a bit longer. So let me introduce you to the bar itself. Now, Heiken Ashi, Heiken basically means average or balance in Japanese. Ashi actually means foot as far as I'm aware, because we use it as Ashi Barai in karate, which is a foot sweep, but a foot or bar. So there we go, that's the brief translation. The average is the key point here, because the price is being averaged. We're using the previous bars being used with the current to give you an average price action. So what you can see on this action here and this action here, well, they're all green, all red or all green. So that might just hold you into a position a bit longer. Even on this move here, nicely all red. Was that the case of the bars if you looked at them candles? No, it wasn't. And this is what we often see. We've got these got this green bar here, bit of indecision near the prior low there. Then we've got the running into the low. Okay, it's giving me a red bar, but then indecision sitting there on the next bar, and there'll be the traders that are looking for the divergences, wanting to be in that position for the long side, and yet what's it do? It then puts another red bar in, and so on until it gives a green bar again, and then the indecision is sitting there with traders. So what does it do? It's averaging the bars out. So if I bring it back to Heiken Ashi bar, you just see how much cleaner it looks. Now the reason I was looking at this was on Friday I was looking at Thursday, and it was a down day on the candle. The normal candle was showing a down day. What I was suggesting though is when we've got different periods within this chart. Let me just explain those, and then it might make more sense to you. Firstly, you've got the momentum period here. Now the momentum on a downside is seen by the flat tops. Flat tops are suggesting there's momentum in that downside. The momentum on an upside is flat bottoms. You see the flat bottoms. Yes, we had some news out and it caused some indecision on that bar. Indecision, but what color is it? Green. We stick. Flat bottom, flat bottom, flat bottom, flat bottom. So all that time the momentum was really pushing to the upside, and it was still bullish. Now, having seen Thursday, I was looking at it as an indecisive bar because you had a wick on both sides. So as soon as you get a wick on both sides, the bar is indecisive. Does that mean to say we close out of something because we've got an indecisive bar? Well, I would suggest no, if you want to stay in the trends for the longer terms. However, it might mean that you start adjusting. If you had a partial profit target and it was tying up with something else in the market, well, you might be saying, well, actually I'll take that profit target. However, it's about trying to stay into the markets and seeing when the trend's really changing. Now what we've seen on this particular occasion here, we've now got this red bar. Now that red doesn't look so red on another charting package I'm using, but it's slightly red, but it's still indecision. Indecision can mean continuation, a consolidation before a continuation, or vice versa. So the point I was looking at, that this had really largely been, the momentum was largely upside. The indecision bars are the ones that have got wicks on both sides. And if you're seeing these running through there, do you really want to be into a long or a short when you've got so much indecision in the market? And yes, that's a long time. That was well over a week. That's nearly 2 weeks of indecision. Hey, at the end of the day, it was the end of July and leading into August. What do we expect? Holidays. So you'll get these periods in the earlier parts, sort of late August into September. Look, indecision. Coming with the times with lack of news, lack of everything else, and then we got some decisiveness coming back through on these bars, and they rolled over again, and vice versa. So in a nutshell, you're getting good movement, good momentum, running with flat tops bars to the downside, flat bottom side bars to the upside. That's what we're looking for in there. The other bars are indecisive. It's not the great time to be taking the trades, because they could go either way, as we know. Okay, normally when we get to consolidation around the high, we expect it to push to the upside. We can use all sorts of other technical analysis in terms of pattern recognition still on these flags, etc. Drew that very badly, but flags can work out, but we can just use the Heiken Ashi bars as a point of additional reference to a market. Is this market really still bearish, or is it still bullish? We can reference it from there. Word of advice then, before I finish, is stay, if you're using it, stay with the trend. Use the trends wherever possible. So we're looking at a daily bar here, so I would come up to the weekly, and you see the weekly trend was largely down. We had we had the indecision area right way back in January 2022, horrible month, as I seem to remember in terms of market action, and then it's chopped around a little bit, then started to become a lot more certain as we moved into February there. More chop, but in a strong downtrend. So we would only be looking on the shorter time frames when we're doing this, we'd be looking at the downtrend. As soon as it starts changing, and we're seeing higher lows coming through, and this is an important thing to stick with some normal technical analysis. Higher lows suggests maybe a turn in trend, and we've seen these double higher lows in recently, and this is where I was looking, and really trying to keep traders looking towards where the market's really going at the moment. Now, as I said, it has now put some indecisive bars there. It could see a bigger correction. Whether it sees a full correction, I'm not looking to trade that, because the trend is to the upside. So I'll let it correct and look for the long side from that. Hope you find this useful. If you do, give us a thumbs up. If you want to see other videos like this and want to request other videos, do pop them on there. I have some decent strategies that sit around Heiken Ashi. Get enough interest, I might even show you one. Okay, so please, as I say, give me a thumbs up. Got that in there again, and I wish you all the best. Trade carefully, get used to it first, have a look at it, get practicing with it first, back test it, see how you're going to use it, if you're going to use it, or just help you stay in the trades. It doesn't matter what it does, just test it first. Take care, bye for now.